Here's a confession before we get started. April and I actually had this exact discussion when we got married. Combined accounts, separate, some hybrid system we'd drawn on a legal pad that neither of us could explain 3 months later. We figured it out eventually, and now we help blended families do the same, hopefully a little faster than we did. The question we hear constantly from remarried couples: should we combine our bank accounts or keep them separate? And the answer isn't what most people expect. In a blended family, it's not really about joint versus separate. It's about creating a system that honors both your partnership and your individual responsibilities. Today, April and I are going to walk you through exactly how to structure bank accounts in a blended family, step by step.
So, Jerry, let's start with the most common question. Should remarried couples have joint accounts, separate accounts, or some combination of both?
Should remarried couples have joint or separate bank accounts? Here's a strategy. Not the only strategy, but a strategy that really works well for blended families. The three-account structure. Here's how it works. Each spouse keeps their own individual account. That's yours and mine. Then you open one joint account for shared expenses. That's the ours. Why does this work for blended families? Because it creates financial partnership in your marriage while honoring the financial autonomy that matters when you have kids from a previous marriage, or when you simply want to protect what you've built. Here's what goes into the joint hours account: mortgage or rent, utilities, groceries, insurance, household expenses. Anything you've agreed is shared. Here's what stays in your individual accounts: personal spending, gifts, money you're setting aside for your own kid's college or wedding, expenses related to children from a previous relationship. This isn't about hiding money from your spouse. It's about acknowledging that you came into this marriage with relationships and responsibilities that existed before it, and that's okay. The couples we work with describe a very specific feeling when they get this in place. Not relief exactly, more like clarity, like the low-grade friction they've been living with just disappears. Yours, mine, and ours. Three accounts. It removes tension, creates clarity, and it works.
Okay, that raised the next question couples often ask us. How much should each spouse contribute to the joint hours account? Should it be 50-50 or should it be based on income?
How much should each spouse contribute to the joint account in a blended family? Here's what we tell couples. Base it on your income ratio, not necessarily 50-50. Here's why 50-50 often doesn't work. If one spouse earns 150,000 and the other earns 50,000, a 50-50 split isn't equitable. The lower earning spouse is contributing a much larger percentage of their income. So here's the framework. Add up your combined household income, then figure out what percentage each person contributes. Here's an example. You earn 150,000, your spouse earns 50,000. Combined, that's 200,000. You're contributing 75%. So you fund 75% of those joint expenses. Your spouse funds the other 25%. Some couples do prefer 50-50 because it feels simpler. If that works and doesn't create resentment, fine. But in our experience with blended families, income-based contributions feel fairer and generates less long-term tension. So income ratio, not 50-50. That's the framework.
Now, here's where it gets more nuanced. What about spending on your kids from a previous marriage? Does that come from the joint account or your individual account? How do you handle spending on kids from different marriages in a blended family? This is where yours, mine, and ours really shines. Here's the guideline. Day-to-day expenses for kids living in your household, food, utilities, school supplies, those can come from the joint account. If the child lives with you, those are shared household costs. But what comes from your individual account? Extra spending on your own kids, college savings, a wedding fund, a car for your daughter's birthday, summer camp, the portion of braces that isn't covered by insurance. Why? because those are discretionary choices about your own children, and your spouse may not agree on the amount. That's not a sign your marriage is failing. It's a sign you're being realistic about your blended family's dynamics. The conversation you want to have: what counts as shared household expenses for kids, and what counts as individual parent decisions? Once you agree on that line, the system runs itself. Shared household expenses for all the kids, individual decisions for your own kids. That's the line. And by the way, we put together a free guide on the 7 mistakes blended families make with their money. Mistake number 4 is exactly what we've been talking about. Link is in the description.
Should each spouse have a no questions asked personal spending allowance? Absolutely. And this one I can speak to personally. Full transparency. I did not love being asked whether I really needed another round of golf, or, and April will tell you this is a recurring theme, another round of golf related equipment. After decades of making my own financial decisions, I was not gracious about it. When you remarry later in life, you're used to making your own money decisions. You've been doing it the same way for years, maybe decades, and suddenly you're expected to check in on every purchase. That creates resentment fast. So here's what we recommend. Agree on a monthly, no questions asked amount for each spouse. Money you can spend without explanation, without judgment, without your spouse weighing in. For some couples, that's $200 a month. For others, it's $2,000. The amount doesn't really matter. What matters is you both agree on it and you both get the same level of autonomy. It removes the nickel and diming. It creates breathing room. You're partners, but you're still individuals. Personal spending allowance. Same amount for both of you, no questions asked.
And those who've worked with us as clients know that I refer to this as the fun fund. Now, there's one more question we need to cover. What about savings and investments? Should savings and investments be joint or separate in a blended family? Here's what we tell couples. It depends on your estate planning goals. And this is the piece most blended families don't think about until it's too late. If you're building wealth together for shared retirement, yes, joint investment accounts can make sense. But here's where it gets complicated. If you have kids from a previous marriage, you may want to keep some assets separate. Here's why. Joint accounts typically pass to your spouse when you die. And while you trust your spouse to eventually pass that money to your kids, there's no legal requirement they do. Your spouse could remarry, they could change their mind. Their estate plan could send your money to their kids and not yours. This isn't hypothetical. It's one of the most common and most painful patterns we see in blended family planning. Wealth that was meant for children from a first marriage that never reached them. Framework. Build joint savings for shared goals, but maintain separate investment accounts for your kids' inheritance, funded from your individual account. Trust, like a Q-tip trust, can formalize this even further. Joint accounts for shared goals, separate accounts, and trust for your kids' inheritance. That's how you protect everyone.
So to recap, the 3 account structure, yours, mine, and ours. Joint for shared expenses, individual for personal spending, and your own kids.
Contribute based on income ratio, not necessarily 50-50. Give each other a personal spending allowance, no questions asked.
And think carefully about whether savings and investments should be joint or separate, because that decision has real consequences, particularly for your children.
And Jerry, I want to say publicly, I fully support your spending decisions, especially the ones I don't know about yet. Our free guide, 7 Mistakes Blended Families Make with Their Money, covers several of the decisions we talked about today. Link is in the description. No email required, just grab it.
And if you want someone to walk you through your specific situation, this is exactly what we do. White Oak Planning is built entirely around blended family financial planning. No other niche, just this. Subscribe if that's your situation.
Same link in the description if you're ready to talk. We'd love to connect. Money is one of the top reasons second marriages struggle. Don't let it be yours.